Dividend 15 split corp DFN. It seems it doesn't want to stop going down. It's been going down for the last month. If we look at the today, actually, on the trading day, it has fallen about 5% or 23 cents. When it comes to financial 15 split corp, actually it did fall down all the way to 659, but it seems to be regaining going up from the crash last week. We look at the 52-week range between these two funds. This one, it's 427. This 427 actually was today to 890. So it came all the way from 8 and 9 cents all the way to 427. So almost a 50% down. When it comes to this one, it came all the way from 995 all the way to 659. So it went down, but not more than 30%. So it's a pretty. This one is pretty good when it comes to look at the chart. Look at the dividend right now. This one pays about 19.85 on the price of today. When it comes to DFN, DFN.to, dividend 15 split corp pays about 26.14, which is 120 divided by 12. So they pay 10 cents per month, which equal to 120 per year. When it comes to this one, it pays about 151. So, and of course that one divided by 12, they pay monthly. So these two fund, dividend 15 split corp, DFN, and FTN, financial 15 split corp, these are two funds that are provided by Quadravest. This is a fund manager out of Toronto, Canada, and they are one of their top popular funds. So as an investor, passive income investor, you want to invest to generate that passive income. You're wondering between this guy, 1985 and 26, which one should you invest? We know right now, maybe this one has stopped paying dividends and this one is paying. So you are deciding, should we go with this? Should we go with this? Those are the questions most investors, especially passive income investors, always find themselves ask themselves those questions. And in today's video, I decided to kind of make that decision easier for you, because I'm going to dig deeper on these two funds, and we're going to look at the financial health. We've already looked at the graph, how they've been performing, and the price. We've looked at the price, how much it is. This one is 436. This one is 759. So after looking at all that stuff, but ultimately we're going to look at the history of dividend, because that will determine which one actually is better for you. Because if you invest, ultimately you want to generate a passive income on monthly basis. So out of these two, which one will suit you better? And finally, of course, it's going to be based on your decision, based on what information you're getting from here. You will make judgment on which fund to buy. And again, if it's your first time, just make sure you subscribe on this channel, because on this channel I talk about finance, and especially I talk a lot about these passive income investment vehicles like ETFs and funds. And also I do talk about growth investment here and there. And if you find a value in this video today, please just give me a thumb up. And if you know someone who will benefit from this video, you can also share. Dividend 15 split corp, financial 15 split corp. These are two funds that are provided by Quadravest. Overview of DFN. Dividend 15 split corp is an investment corporation designed to pay monthly cash dividend. The corporation invested primarily in a portfolio of 15 dividend-yielding, high-quality Canadian companies. Two types of shares are available. There's Class A, which is DFN, and there's Class Preferred Share, which is DFN.PR.A. So when you're buying them, you have to make sure you put the ticker symbol right. We'll look at the core holdings. You have a Bank of Montreal, there's a Bank of Nova Scotia, BCE, CI Financial, CIBC, Enbridge, Manulife Financial, National Bank of Canada, Royal Bank of Canada, Sun Life Financial, TELUS Corporation, Thomson Reuters, Toronto Dominion Bank, TransAlta Corporation, TC Energy. So these are, when you look at these companies, there are a bunch of banks, there are insurance companies, there are some energy companies, and there are some communication companies. So we look at a view of Financial 15 Split Corp. Financial 15 Split Corporation is a high-quality portfolio consisting of 15 financial services companies made up of Canadian and U.S. issuers. The portfolio share have demonstrated a record above average long-term share performance and dividend growth. Financial services companies are expected to benefit from growing economic and capital market recovery, earning growth momentum and continual consolidation trend within the industry. The corporation offers two types of shares. There's Class A, which is FTN, and there's also a preferred share, which is FTN.PR.A. When we look at the companies that they invest, Canadian issuer, these are all banks. So there's a Bank of Montreal, Bank of Nova Scotia, Canadian Imperial Bank of Commerce, National Bank of Canada, Royal Bank of Canada, Toronto Dominion Bank, Manulife Financial, Sun Life Financial, Great West Life, CI Financial. So five of them, they're or six of them, they're biggest biggest bank, and of course there are four here. They're more of like financial, provide mutual funds and also insurance. We look at the U.S. issuer. We have a Bank of America, Citigroup, Goldman Sachs, J.P. Morgan Chase, and Wells Fargo. We look at objective of the fund, which will have pretty much the same objective. So you have so there's a preferred share, and of course this one also has a preferred share. But on purpose of this video, I think for most people, I'm just going to focus more of a Class A share, because preferred share, it does pay first of all lower dividend, and since it's an equity, I mean I don't see any important of investing in preferred share. You may as well just invest in bond if you want to invest in preferred share. So we are skipping preferred share, but we'll just focus on Class A share for the purpose of this video. So Class A share, the objective is to provide a holder of Class A share with a regular monthly cash dividend. Initial target to be 10 cents per share, or yielding of 8% per annum. Original issue price. So that 8% does not confuse you. This is just original issue price, but because the share has fallen, of course, then the yield becomes what I've showed you on the Yahoo Finance, which was about 26 at the moment. On or above the termination date of December 1st, 2024, subject to further 5-year extension thereafter, to pay holder of Class A share at least the original issue price of those shares. So if they have to close this fund, if they don't renew when they go to apply, and then they will give you back your money at the price of NAV. So I've made a video, look at my other video, explain how this works. We look at the share highlights. It's monthly cash dividend, quality investment and diversification, leverage to performance of high quality stock, capital appreciation potential, attractive alternative to other income vehicle. When you look at the objective for this this fund, which is a Dividend Financial 15 Split Corp, it's the same, pretty much the same thing. The only difference here is because this one, it does have the yield, it's a different, of course, and then the termination date is going to be on December 1st, 2025. So this one has only 1 year and 3 months before renewal date. This one has about almost 2 years and 3 months. So this one has a long way to go before you have to worry about renewal. When it comes to a share highlight, Class A has the same thing, pretty much monthly dividend, quality investment and diversification, leverage to performance of high quality stock, because they apply leverage on both funds, capital appreciation on potential attractive alternative to other income vehicle, eligible for registered accounts. So all of them you can invest in registered account and also non-registered account. We look at the valuation top holdings. We've already looked at the top holdings. These are the top holding of what they invest. This is, of course, 15 companies. That's what it's called, 15 dividend. But there are more of blend of companies: financial, communication, transportation, and energy company. When it comes to this one, the difference between these two holdings, of course, this one has also 15 companies. But the difference, these are all banks, and 10 of them being Canadian banks and 5 of them being US banks. So when it comes to valuation here, August 31st, 2023. That was it. It's kind of dated, but when you look at the today's price, the NAV here is 1665. Distribution is about 188. We'll look at the net asset value after distribution is 1650. And this one here, the reason why it actually hasn't paid dividend is because the NAV right now is about 1468. So the rule of these two funds is that any time the NAV, which is the NAV has to be 15 on both of them, which is combination of preferred share and Class A share. So combined, the valuation will be $15. So whenever the NAV is below $15, they are not going to pay any dividends. And you can see right now, this fund actually didn't pay dividend this month. And we look at dividend history; they didn't pay any because of that reason. We look at this one, of course, is above that, and they will keep paying those dividends. So ultimately, when we invest in these two funds, the main reason is because we need to get those distribution on a month basis. So, and before doing that, you have to make sure you invest in something that's more reliable. So we're going to look at these two, their history of paying dividend, and which one is more reliable if you were to invest in them. So we're going all the way back to look at this one. This one started in April 30th, 2004. When we look at this one, when it started all the way back in, of course, December 31st, 2003. So we look at this, it's been paying a pretty good. It did pay a lot all the way, all those years. It did pay, but here's the thing. We'll look at this here. In April 2009, of course, they did cut dividends. Do you see that? 1, 2, 3, 4, 5. So 5 months they didn't pay dividends. When we look at this one, but if we go this on the same date, if we go on the same date on this one in 2009, so this is, it paid all the way from 2004 all the way to, so 2009. While this didn't pay dividend, this one, of course, DFN did pay dividends. So there was no cut in 2008 crash. In 2009, they actually kept paying dividends all the way. There's no cut on this one. There's no cut. Look at that. It's a pretty good history of dividends. Look at that. They didn't cut all those years. Look at that. I really like this fund. And when they cut dividend, we look at the April 2020. That's when the trouble started. 31st March 2020, they cut dividend for March, April, May, 3 months. And of course, in June, they reinstate. And then in October, they cut their dividends or distribution. And then they've been paying since then. They never cut again. Since then, look at that. And of course, they did cut this month. So when you look at the history of dividend, that's how very little this dividend 15 split corp has cut their dividend. Very, very few time. And when they cut, the only time it took longer was only 3 months, I think. Of course, that was in 2020. You see that? It's only like 1, 2, 3 months they cut dividend on that in that month. When you look at this one, of course, the first dividend in 2009, I showed you, this was 4 months cut. 1, 2, 3, 4. 1, 2, 3, 4, 5. Actually, 5 months. So they didn't pay in December 08 all the way to May 09, all the way to April 09. So that's 5 months cut. So if you are relying on those dividends within 5 months, you won't be able to pay your rent because that's way too long. When it comes to another cut, look at this. In August 2011, July actually 20, from July 2011, there was a dividend cut all the way to December 2012. So that's about, look at this, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 months you didn't get dividend. You know how long is 18 months? That's 1 year and a half. So a year and a half, you don't get any dividend from this fund. That's how long they cut dividend between that period of 2011 to 2012. That was horrible for people who were depending on this fund. The next dividend cut on this one, we look at that, they've been paying dividends consistently from then. December 2018, they cut dividend once. And when we look at August 2019, they did cut dividend again. And we look at another time in 2020. We've seen here 2020, they only cut about, in 2020, the whole month of 2020, they cut 4 times. Look at this one here. They did cut from March 31st, 2020. So the March all the way to October. So that was 1, 2, 3, 4, 5, 6. So 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months you didn't get any dividend from this fund. That's a pretty horrible. And then of course they've been paying since of course November 30th 2020 all the way up to now. So conclusion of these things, because ultimately when you invest in these two funds, you're not only looking at of course a price appreciation, which of course price appreciation comes in forms of a dividend investment. If you just take your fund, the fund seems to be going down, but we look at the main goal that we invest in this is for dividends. So judging from these two, yes, this one right now it doesn't pay dividend because the NAV is lower, but the dividend 15 split corp has very fewer times that they cut dividends since inception in 2004, while this one has cut dividend a lot. And when this one cut dividend in 2020 market crash or COVID time, they only cut dividend for about 3 months. That was the longest they've cut dividend. When it comes to this one, dividend 15 split, financial 15 split corp, they cut their dividend for 18 months. That's a year and a half. You don't get any income from this fund if you're an investor and relying on this one. So between the two, to be honest with you, based on what I can see, I'm really leaning towards dividend 15 split corp and take your chances of at this moment, because the price is very low right now at 436. I'm waiting to see how much it's going. It might go further down, but I don't see too much potential downside on this one, while this one also I don't see any potential of going too much down. But if dividend is cut, then this one tends to prolong the dividend cut, versus this one only cut for a few months and then they reinstate those dividend. But ultimately that's just a past history. We don't know what the future holds, and but that's my judgment. I would definitely pick dividend 15 split corp versus financial split corp. Or the other thing you can do is actually invest in both of them if you really like this type of split fund. But also there's also alternative to this one. I'm going to make another video comparing this type of funds versus other funds from Hamilton. So again, if it's the first time, just make sure you subscribe, and if you like my channel and you like my content, just make sure you give me a thumb up. Thank you for watching. Till we meet again. Bye bye.